everybody. John Blank, Zacks Chief Equity Strategist here, and today I'm going to give you my top energy stocks supplying data centers, AI and cloud data centers. Energy stocks, of course, are in lots of different groups, coals and alternatives. Alternatives will be much wider than you think today. In oil and gas and drilling and exploration and production, clearly the traditional businesses that will not be as traditional as you think. We understand the technologies that are being applied today. So really interesting October 21st, 2024 discussion on top energy stocks supplying data centers. And I really think you're going to learn some things here that are not widely understood, and you're going to benefit as an investor when you do understand these things. So, of course, these are my disclosures. These are my views, but my views are coming from the study of a PhD economist, and they are not necessarily the views of Zacks Investment Research. The rest of this you can read at your leisure. Okay, so here's our review table for this energy sector. I've got my stock tickers, company names, and market capitalization. So here's tickers, company names, market cap. And of course, the industry codes are over here, 39 through 42. Coal and energy alternatives will be at the top. Then oil drilling and oil exploration will be beneath them. So for example, here we've got the big market cap coal companies, led by China Coal. Of course, a lot of the production for coal nowadays gets produced in China for Chinese steel production. Warrior Metallurgical Coal, also for steel production. Peabody, Consul, Alliance, Arch, and Natural Resources. A lot of smaller cap names. Those are $3 billion stocks. Of course, China Coal is $16 billion. Tells you where all this coal is being put to work. They are, trying to get away from that in China right now, but obviously not doing as complete a job as you might think. All right, down in the energy groups, I want to point out a lot of different names here. I'm going to focus on Cheniere and Texas Pacific today, particularly. But there's other names like Constellation, TC Energy, lots of names here you may not know. And of course, down here, we've got a Chinese name at $13 billion. Then, of course, the oilfield services names, the big three, Schlumberger, Baker Hughes, and Halliburton. But there are other names here. Weatherford, we'll talk about. Very high ROE here for Weatherford. I think these guys are very much involved with the technology of fracking now. Down here, we've got the oil sands story. Canadian Natural Resources, $75 billion market cap stock. This is because of those oil sands. Cheniere Energy, we'll talk a lot about today. This is, by the way, Cheniere Energy LP at $23 billion. This is Cheniere Energy, $41 billion. So this Cheniere Energy includes that one. This is the LP for the LNG oil terminals. This one includes the pipeline to that LNG terminal. So it's a little bigger market cap stock than this one. So CQP and LNG, really interesting story here. We'll get into their shipment 2021 to Taiwan. Of course, we now know what's going on in Taiwan. There's production of chips. And of course, data centers have to be happening there as well. So over here, again, we're going to have the middle Zacks Rank story here. So these are ones that are moving the dial on the earnings estimates currently. Again, you're going to see some names here that you don't see over here. For example, Smart Sands, Transocean, Helmerich, and Payne. Over here, I bet this little gray line, again, you can sort these guys out into these four groups. Always come back to this slide. In these talks, this is where you can get the tickers, the market caps, understand the structure. All right, so latest trends and developments. Number one, in the coal industry, I'm going to focus on, of course, declining demand because natural gas is rising in use. Renewables are rising in use. Renewables will be the word we'll use for wind, solar, things like that, not alternatives, which will include a lot of different stuff in the Zacks world. And coal-fired power plants have been retired in the United States. Of course, the Chinese thing, another whole story. Innovation does happen here. It's in carbon capture and storage. It's in high-efficiency, low-emission technologies. And yes, autonomous mining equipment is now in play in a lot of businesses, including the coal industry. Alternative energies, like I said, is going to be different than you think right now. Advanced nuclear power plants getting a lot of press these days. Carbon capture and utilization, not as much. Distributed energy resources, how to move it around. Over here, energy storage solutions is a big part of the alternative businesses. Enhancements in energy storage, better integration, intermittent power. That's when it comes on and off. Lithium ion batteries, solid state, and flow batteries. Again, thinking about what alternatives is in this context would probably broaden your understanding. You will think of renewables here, solar, wind, green, and geothermal. Don't confuse renewables with alternatives. This is a much bigger pocket of things. All right, oil machinery. Again, technological advancements, Internet of Things here, sensors to monitor equipment, predictive maintenance, and reducing downtime with technology. Super interesting stuff. Of course, sustainability does matter here. They are trying to reduce their environmental footprint. They are electrifying drilling rigs and flaring reduction techniques. Of course, they flare off a lot of natural gas, and they have techniques for that, or shifting, because that gets to be more sustainable. Energy exploration and production. Again, Internet of Things devices, AI and machine learning for exploration and production. Enhancing exploration. Of course, this is happening, folks. We've talked about a lot of medical, law, marketing, strategy, things like this, but also oil and gas, exploration and production. AI, Internet of Things. All right, top stocks by market capitalization. First off, we're going to go through these from the same order, folks, be coal and alternatives. And of course, right now we've got the free cash flow coming up for CQP. Who is that? That is Cheniere Energy LP, the 23 market cap billion company. And this is, they got this whole Sabine Pass terminal. So what you need to understand here is the Sabine Pass terminal was the first big LNG terminal for export in the United States. It was built not too long ago, 2016-ish. And of course, you can see it coming right on online and right on up the way. Here's the story. They shifted to this Sabine Pass terminal starting in about 2005, got it finished in 2016. Then Cheniere founder was ousted by Carl Icahn. They put in Jack Fusco, and he moved it to be an exporter to international markets. And now deliveries to Taiwan were set to begin in 2021. I think we can guess they have begun. So Cheniere Energy LP CQP. All right, then we get into oil machinery drilling and exploration and production. Of course, who is the big free cash flow player here? CNQ, Canadian Natural Resources. They are the world-class oil sand miner. And of course, they are doing quite well. They have rebounded quite dramatically. That's the one you name you're going to look at here. Return on equity. Again, I see something that's sticking out very dramatically. TPL with an ROE of 40 over some of the 17s, 16s, and 15s in the alternatives. So what do these guys do? Texas Pacific Land, you can see that chart taken off here. This is pipeline, power line, and utility easements. Again, what are they doing? These are the people connecting those utilities down in Texas and connecting to power lines and pipelines. So again, keep this in mind. That's your ROE star in this space. Okay, oil machinery drilling. Who's the star? WFRD with a 49 ROE. Incredible. Weatherford is the name of the company, Weatherford International, and they do drilling solutions, gas well unloading, restoration, and other activities. They're down in Texas, of course, like all these companies tend to be. All right, total debt charts for the top 15 stocks by market cap. Look through these at some point in time. You can do that here as well. And of course, I want to point out a major player here, LNG. Building out that debt structure from 2013, bubbling up and then still pretty high. That is the $41 billion market cap, and that is for the 94-mile Creole Trail pipeline. That obviously connected the pipeline from the LNG terminal to its export source and all those tankers. Here is LNG. That's the big one that rolls up the other one. And you can see it has been nothing but a strong play for some time now, since 2020 to 2022. That's a $40 to 160, 180. This was a great trade to know about if you knew about it. Ticker LNG. Is there still legs in here? Good question. EPS of $10 to $15 a share for a $180 stock. I'll let you think about that. It's a good PE ratio still. All right, reinvestment rates. Here is your reinvestment rates. You want to see somebody who's doing a lot of reinvestment. Of course, who sticks out? TPL, Texas Pacific Land, in the alternatives. So keep in mind, here's a nice little area. I put them in yellow of these alternatives. Here we've got Weatherford at 86% reinvestment rate. Again, sticking out very strongly. Halliburton doing more than Schlumberger and Baker Hughes. Of course, keep that in mind as well. Devon, EOG, those are our natural gas players. Devon is the biggest. They're very important in natural gas. All right, maximum number of analysts. Let's get through this. Talk about the big ones here. This is First Solar, which is doing phenomenal. Here's their story. They are basically making solar modules with a thin layer of cadmium telluride semiconductor metal. So they're actually making panels. Enphase is doing all these things called the IQ platform. They design, develop, manufacture, and sell home energy solutions. So this connects everything together. So those are the panels. Those are the connections. The panels have been doing better than the connections. I assume this has something to do with the infrastructure package and the CHIPS Act. However, Enphase, really interesting story. They have stabilized the stock lately. Both worth talking about because they're the big players. Okay, let's keep going. Here we've got Technip FMC, ticker FTI, just a phenomenal company from a stock perspective. And here's what they do: subsea and surface technology. So this is what I'm talking about. They're basically coming up with new technologies to find oil subsea or surface. EQT, they explore natural gas in the Appalachian Basin, and they're the big player there. So again, EQT may not know them, but they're a $22 billion company, and they're worth knowing about. So let's keep going. EPS, coal. Here is Arch Coal. EPS alternatives. There's First Solar, just killing it, moving like crazy. You can look through this again at your leisure later on. EPS forward 12-month charts. These are great. Schlumberger, Halliburton, Baker Hughes right here. EOG doing great here. And lots of other names, of course, Weatherford over there. Net margins, again, you're looking at 25% margins. First Solar is 32% margins versus Enphase is 9%. Go figure which one's going to work better here, folks, the 9 or the 32. That's what happens when you've got a space that's really producing for you. FSLR versus ENPH. All right, more stuff here. Lots of names to look into. Devon's down here, EOG's down here, etc. All right, total debt to capital. Again, great stuff here for you to look through and enjoy this story as it plays out for you. CapEx and depreciation, I'll skip it. Let's get to the first and final chunk of which is the Zacks rankiness. So first off, we've got coal forward revenue 12 months and energy forward revenue. So the revenue story is always super critical, and you can see it's been building really nicely for a lot of names here. So in your story here, come back to this slide or these stories of revenue forward 12 months. I put it first in this section because I think it's the most important. There's the revenue forward 12 months for all these other names in this space. That's oil machinery drilling and E&P. Here you've got names. There's EQT, as you can see, leading the way with revenue. Cash flow yield, of course, very important. You just want to look over here at this ranking for the top names. That's going to help you out in this space as well here. Just the top names in these spaces. It'll work out great for you. Enterprise value to sales, of course, you want to see somebody buying up the stock and moving it up versus moving it down. That's what you want to see here. And if you see a name like HCC, that's where you want to look and learn about this business and see what they're doing. That's critical. Enterprise value to sales here. Of course, these are the bigger names. You're going to know them better. Here's EQT again. Here's RIG. LNG is over here. We've talked about that. Enterprise value to sales at the top, of course, because it's in that space it's growing. Earnings before interest and taxes down here. These are the actual industries. So actually, you can see E&P is higher than profits than oil machinery. Those are the two biggies. Coal is down at the worst, of course, and energy is in second place. Not actually doing as well as you might think. The real big player has been the E&P guys. Keep that in mind. However, the drillers are looking pretty solid from a long-term investor perspective. Same with earnings pureness down here. You've got, you want to see people putting money back to work and having it not just come out of the balance sheet and just kind of tricky financial place. So you've got the story there as well. That's it for me, guys. John Blank, PhD, Chief Strategist at Zacks, and of course, Chief Economist as well. I'm doing this for Zacks Professional Services. Please call us 866-794-6005 or send us an email at strategycall@zackspro.com. You can also find us at the web at www.zackspro.com.